All right, welcome to our last work together in the chapter 5, where we'll be estimating inventory using gross profit, retail, and then also doing a couple of our financial analysis ratios we've talked about. So our first thing we need to do is open up our instructions in a separate window. I am going to try to do the split screen for this one just because I think it's easier than flipping back and forth. So I'm going to throw this over here and then also put this one over here. So it says we're going to estimate ending inventory using gross profit and retail methods, as well as our financial analysis ratios of the merchandising inventory. So we have the information that's available for Debbie's Fabrics for the month of October. And our first order of business is to estimate the ending inventory using our gross profit method. So we have this over here. We just need to fill in our department, which is for Debbie's Fabrics. And the date is 10/31 of 20 dash. And then we start with our beginning inventory. Now, when we're doing gross profit method, we're doing everything based on cost. So here's our information here. So our beginning inventory is $96,850. Our net purchases to date are the $19,480, coming from that information that's given to us. So that means that our merchandise available for sale is these two items added together. So when we do that, we get a number of $116,330. Then we need to take our net sales to date. Our net sales to date is only given as a retail number, so that's the 40,510. And then we need to figure out less our estimated gross profit. So again here, it'll say that we're going to take our net sales times our estimated gross profit percentage. They give us our gross profit percentage of 52.6% here. So we're going to plug 52.6 in here. And then we take our net sales, which is the 40,510, and we multiply that by 0.526. And we end up with $21,308.26. So that's our estimated gross profit. It is not a for sure thing. It is an estimate, so we just need to keep that in mind. So then in order to find our estimated cost of merchandise sold, we take our 40,510 and subtract out our estimated gross profit. When we do that, we get $19,201.74. And so to estimate our ending inventory, we take our merchandise available for sale and subtract out our estimated cost of merchandise sold, and that gives us a total of $97,128.26. And that is our gross profit method of estimating ending inventory. Again, like I said, it is not a for sure thing because it is an estimate. That percentage might not be accurate for that year, so that is a risk you run when you choose not to have a perpetual system, which would allow you to do FIFO, LIFO, or weighted average. So then we'll scroll down and it wants us to do a retail method. So like I said, with the retail method, remember you need to keep information for both cost and retail. So you see we have that here. Most people tend not to do this because it means maintaining two separate records. Some people choose to. That choice is yours as a business. So we'll plug in our information up top here, Debbie's Fabrics again, oops, and 1031. And then we're going to start plugging some of our information in. So our beginning inventory at cost is $96,850. Our beginning inventory at retail is $205 or $205,190, excuse me. Our net purchases to date at cost are $19,480, and our net purchases at retail are $40,750. So that means that our merchandise available for sale is going to be the $96,850 plus $19,480. That gives us that $116,330 that we used in our gross profit right up here. However, at retail, we take the $205,000 and add the $40,750, and we go up to $245,940. Oh, saying those numbers can get to be tough sometimes. So then we need to have our net sales to date. So we have net sales of 40,510. We've done that before, which means that our ending inventory at retail is the difference between our merchandise available for sale and subtracting out our net sales. So when we do that, we get 205,430. You do that. Now, the last thing that we need to do is find our ending inventory at cost, which in order to do that, we need to take and find our percentage. Now, in order to find our percentage, what we need to do is we need to take our merchandise available for sale at cost, right here, 245,940, at cost, and then divide it by our merchandise for saleable at retail. So our merchandise for sale at cost is the 116,330. We divide that by our merchandise available for sale at retail, which is the 245,940, and we end up with a percentage of 47.3%. So again, I'm just taking the cost divided by the retail. When I do that, then I am ready to find our ending inventory at retail. So we take our ending inventory at retail, which is our 205,430, and I multiply that by the percentage I just found, which would be 0.473, to get our estimate of our ending inventory at cost, which is $97,168.39. So it is a little backwards. They give you most of the information that you need. All of these numbers up here are easily found. The estimate of the ending inventory at retail is quite simple because you can just take your merchandise available for sale and subtract out your net sales and you get it. However, to estimate your inventory at cost, what you have to do is figure out that percentage. So you have to take the cost divided by the retail when we're talking about merchandise available for sale. So we just want to make sure that we get that correct to get that percentage, and then you take your inventory at retail, 205,430, and multiply it by your percentage of 47.3. So now what we want to do is scroll down and start looking at some of our financial ratios. Our financial ratios here, we are going to do our first one, which is our inventory turnover ratio. So with our inventory turnover ratio, we're taking our January 1st inventory, which, oh, here's our information. I'm like, I'm not finding these numbers. Okay. Right over here, they give us the inventory for Debbie's Fabrics was $92,890 on January 1st. So we'll plug that in here, $92,890. And our ending inventory was $101,700. And so we're going to add those two together and divide that by 2 to get our average. So when we do that calculation correctly, it gives us an average merchandise inventory of $97,295. So then what we do is we take our cost of merchandise sold, which they give to us is $496,710, and we divide that by our average merchandise inventory, which was the $97,295 we just found. And then that calculation is going to yield to us our inventory turnover ratio. So it does say we want to round the inventory turnover ratio to 2 decimal places and the days sales and inventory to the nearest day. So when we do the rounding correctly, we end up with an inventory turnover ratio of 5.11. which means that our average merchandise inventory is turned over every 5.11 times during the entire year. We turn over our average inventory. So to find the number of days that that inventory sits there, we take our days in a year, which is 365, divided by our inventory turnover ratio we just found, which is 5.11. And when we do that calculation, we again want to round to the nearest day. So if you're taking 365 divided by 5.11, you get 71.42. So we're going to round down to 71 days. Okay, which means that when we make a purchase of merchandise, it sits in our store for 71 days until it's sold, which if you think of 71 days, that's just over 2 months, coming up on 2.5 months. So that's quite a bit of time for us to be hanging on to merchandise. So that was us completing a gross profit method of estimating inventory, the retail method, and doing a couple of financial ratios. So you can head over and do your 5-3 on your own.